Welcome back everybody to a new video, and of course we're going to look at the charts. Today we are going to look at a few patterns that might signal tops and bottoms, and of course we're going to look at BTC and ETH. But before we do, please hit the like button, subscribe, then also click on the notification bell and click on all so you don't miss any time sensitive updates. Then without further ado, I suggest that we get going. What I first want to talk to you about, want to show you, is the so-called death crossing, and that is when the 50 EMA and the 200 EMA cross each other. How does an EMA work? Well, if you have 50 days, then that is kind of then the average. If then 51 will be added, then number 1 will be taken off, and that is kind of how the moving average goes. So the smaller the moving average, the more the price goes up and down, and the bigger the moving average, in this case the 200, the slower your price goes up and down. And when these lines are crossing, people see it as a so-called death cross, and that means that the price will go much lower, and the other way around, of course, is the other effect. To be honest, I think that this is a bit of baloney. I do not use this at all. Matter of fact, this is a very lagging indicator because you always take data from the past, the last 50 moving average or the last 200, to get a certain point at the chart. So I'm not using it. Matter of fact, also these crossings has not been indicators of us going lower, because for instance here we have a death cross. This was in June somewhere, and there you see that we're at or around that date actually made a low. We kind of tested it one more time and then we went higher. So if you went completely short here, you right away had the trade going against you, and you had to hold it until we're turning. But yeah, I think that you might have already been stopped out or taking your losses. Here then we would have like a positive crossing, but then you would have missed this entire part, and now again we would have a death crossing. Let's see if I can pull something up what was more in the past. Then we kind of saw the death crossing here. Yeah, to be honest, this was just before the dump. We have to be strict here. So yeah, okay, you kind of had that dump, but also here, if you would have only traded this, then you would have missed also this entire pump, which was quite significant if you would have bought the dip, which was more than 80%. So I am not using this at all. If you see people talking about it, I would say, use it or don't use it. Like I said, I don't think it's powerful. This chart by the way stops here because this is FTX market, so this exchange is not so old yet, so therefore there's not so much data. But it works actually pretty well here in TradingView. Alright, I'm gonna take this off. I just want to mention this once, and then you have seen it, and then you actually can forget about it. We are still trading in this channel at this this falling wedge, which actually is bullish. We should break out to the upside. You could also take this one and draw it a little bit more like this, and then we have been bounced off the top. I kind of hold it like this because I want to be conservative for the breakout. That's why I'm not taking the line so tight. I really want to see you break out above and then going higher. We have been rejected from this level. I draw this already a long time ago. That was the 44k level. Then we dropped down. If I'm going to zoom in a little bit more, because actually that's much more interesting. So we hit this 44k level, we dropped down to 42, we kind of bounced off, and this was also this box that we draw yesterday, that we have multiple touch points of support and resistance, where I said we went lower, then this is the tiny level, and then we went up again. So you see that the ranges are pretty tight, so it's hard to really trade this and say, here I'm going long, here I'm going short, or here I'm going short, or I'm waiting for another bounce and then go long, or if we break this, then I'm going till this level right here. So it's very wicky. A few scenarios that I am taking in account is that one, we are going to go lower, test this one more time with a big wick and then going higher, or we zigzag, then we are jumping out and we're going higher. What is quite tricky right now, and that is also something that I have said yesterday, I'm going to zoom this in very much so that you can see it, is that this ribbon line Let me see where I had that. Oh no, I need to pull it up real quick. I think I deleted it. That's this one. Yeah, you see that the price is not in. We have wicked in, but we're going lower. If we close below, that looks pretty bad actually. Then last resort is then a bounce, a drop down and then a bounce out. But here we have seen that too, that we actually had a close with the body of the candle below, and then the next week we pumped up. So far we have not seen that pump. The market just stays very weak, very volatile. The buys have not been stepped in yet, so I am staying pretty cautious. If we are zooming in again on the hourly, then what have we seen on an on a fib level? Well, we went up, we went down here. You see that we had some struggles here at 23.6, then at the 38.2 we kind of wiggled and went to the 0.5. Usually Bitcoin likes to test the 61.8, so if we would go lower here, that also would coincide with so many touch points here, so that I would not be surprised if that happens today or tomorrow in the weekend, and then maybe higher. So yeah, again, there's not a super clear signal that said that is the level, that is what we're going to visit, because I just said we could also go down and then go higher. We can just jump up from here. The 61.8 is one, so it's not saying that I want to cover every base. I just want to keep in count that there are multiple scenarios and that this is a very tricky range to really take in longs and shorts right now, and to really be on top of the price. So those are then the three scenarios that I keep in mind of. The bigger ones are then jump out or a drop down and then jump out. And on the on the hourly time frame, so really for day traders, then I would keep in mind on 61.8 that we might have a retracement there. I wouldn't be surprised. Let's quickly head over to ETH. We kind of had the same thing. We had a bounce here from the box that we drawn, that we had also had so many touch points. Actually, it was really bit in the top of the box before we went higher. But to say that we really had a strong bounce here so far, not yet. Let's quickly zoom in on the hourly. Excuse me. We draw this channel yesterday where we kind of walked out. I am going to take that channel out because that's not relevant anymore. Like that, very good. And then we also kind of saw the levels that we already drawn, that just very tiny ranges every time where we trade between two, where you think like, oh, now we're going higher, we're going lower, because this also looks like, hey, we retested, we're going higher, and then actually we don't halfway already, and we're crossing, we're dumping low, and then we are suddenly jumping up again. So that's a bit tricky to trade this. Matter of fact, actually I took a trade right around this level after we saw the bounce. So went up, and actually then already quite fast again we dumped down. I had my stop loss just underneath here, so that in case we would have bounced, actually even a little bit lower here, that in case we would have bounced just off this level, that the position would not be liquidated. That didn't happen because we went lower and then we went higher. So that's a bit of a bummer. If we are also here using the FIB tool, then we're seeing kind of the same story. Let me see if I can draw this correctly. I think it's here. Then you see that we're now kind of fighting with this 23.6, and we also had already multiple touch points here on the 38.2. Let me see if I've done this correctly. Yeah, this is correctly. Okay. So also here I wouldn't be surprised if we go to 61.8. That would be then among the 3100 level. This top was the 3400 level. Right now 3200. So yeah, if we go to the 0.5, it will be 3165. 61.8 is around 3100 level. Not huge or major swings, but yeah, I'm a little bit concerned because I think Bitcoin is still leading the market. So if Bitcoin crashes, then almost 100% sure that the alts are going together with BTC. So if that happens, what are the levels that I'm looking out for? Of course, we're going then back into the box, and then the levels that I'm really looking out for is this range somewhere between 3100 and 2700. Below that, I think there will not be a lot of space, because then I think it is around approximately this level. We're talking about 22 to $2,300. That's quite a drop from now. Can happen, but I'm not counting on it. If we have another wick down and then we're moving higher, that will be great actually, that we might be test the bottom of this range. So far January has been ugly. I actually expected a much better January, so I need to be completely transparent here. This downfall so far doesn't look it's over yet. I am not very 100% sure that this was the bottom yet, just because the price action here is not strong yet, and I don't see a really clear sign that the bulls are really stepping in and that the volume of these bounces are then getting higher. So we're staying very cautious. Of course, fear and greed index still staying low, quite a lot of fear. Maybe disbelief that the markets are rising a little bit, could be also a fundamental fear that the price is just still very weak. We also see here that we already range bounding there for a while. Then the alts, they are looking better. Last week you could have done pretty good. I hope you have been accumulating. Again, doesn't say that the bottom is in, but at least some of the alts have been pretty good so far. And on a monthly basis it actually still looks pretty bad. So yeah, we have seen some big bumps, but these are usually the quite exotic names, something like SafeMoon or Rose or SCRT, or just I usually don't trade this personally because I think it's too much, too volatile. It's you can't really trade it, so that's why I'm staying away of this kinds of stuff. Alright, that will be it for today. Maybe I will make a second video later on to see how we are closing the day, because Friday usually is a little bit more volatile. We have more red days on Fridays, then we have green days, and then we'll see what we can also expect for the weekend. If not, then I will see you most likely on Monday again. Have a good one, enjoy your weekend. Thank you so much, bye bye.